In this video, I'm going to show you a mean reversion trading strategy which I created over 3 years ago. That means that in the last 3 years, it's had a chance to prove itself, and I'm pleased to say that it's been working pretty nicely, as we can see by the equity curve shown here. And out of all the trades taken, it's had an 87% win rate. Those of you who are long-term viewers might remember this trading strategy. I first released it on YouTube back on the 4th of April 2021. In that video, I showed you the process which I used to develop this strategy, step by step. The process which I use for a lot of strategies in attempt to try and produce profitable trading strategies. Some of which, like this one, will go on to continue to make money well into the future. I clearly did something right when developing this strategy, because this strategy has also gone on to make money years into the future. I'll show you the rules for the strategy and how to trade it in just a moment, and then we'll look at the updated strategy performance report. And then after that, I'm going to show you a very worthwhile improvement which I didn't include in the original video. If you're interested in the process I used to develop the strategy in the first place, then I encourage you go back and watch that original video after you've watched this one too. Now let's go and have a look at the rules and see how to trade this strategy. Trade entries, and we're looking at the daily chart of Euro-Pound Forex pair. Number 1, if the close is greater than the highest close over the last 14 bars, or 14 days in this case, then sell short next bar at market. And the opposite is for buy trades. If the close is less than the lowest close over the last 14 days, then buy next bar at market. Now I've said if the close is greater than the highest close over the last 14 days, and we're basing that on the bar before. What we could also say is if the close is the highest close over the last 15 bars, then sell short. And when I say sell short next bar at market, that means we sell short on the next open. Because it's Forex, that's going to be a few minutes later, unless we get a signal on the Friday evening, and then the entry will be on the Sunday evening. And we have actually got a trade filter, and I went all through this in the original video, but it's a volatility based filter, and we're using average true range, or ATR. So pull up the average true range indicator, set it to a length of 14 bars or 14 days, and we want to make sure that the value of the 14-day ATR is less than 120 pips. There have been times over the past decade or so when the volatility has just gone wild, and that's not good for this trading strategy. So that's what this filter does, it just keeps us out of those rare times when volatility goes wild. Trade exits are really easy. We're looking at the bailout exit, or the first profitable close. So what that means is when we're in the trade, we look at the trade at the end of each day. If, let's say for the end of the first day, we're showing profit, then we'll exit the next open. If it takes 3 days to show profit, then we'll exit. If we're showing a loss at the end of the day, then we just stay in the trade and check the next day if we're in profit or loss. And we have a stop loss, just a simple stop loss of 250 pips. Here's a trade example, and this just shows an 8-bar look back rather than the 14-bar look back. We're going to look at a few different look backs, and this was just one of the screenshots which I got. I've actually put Donjon channels on the chart here and just displaced them 1 bar. And the Donjon channel is looking at the closing prices. It's not looking at the highs and the lows. It's looking at the highest close and the lowest close rather than the highest high and lowest low. So let's look at the first trade, which is here. We can see that the Donjon channel showing the highest close of the last 8 bars is here, and on this bar the close smashed through that high and it closed up here. So that was our signal to go short, and wait for the next bar open where we shorted. That's where we shorted there, and then we held that trade for 1, 2, 3, 4, 5, 6, 7 days, or 6 days, and then we exited on the open of the next bar when we saw profit. The next day we got another trade. We saw the close here was less than the lowest close of the Donjon channel, so we entered the market on the next open. So we bought on the next open, and then we stayed in the trade 1 day, 2 days, until we closed into profit, and then we exited at the first open. Then we were flat until here, where the close closed below the lowest closes. So we bought the open of the next bar, When this bar closed on the same day, it was in profit, so we exited the next open. So pretty easy strategy to trade, especially if you put the Donchian channels. But just remember, we're looking at the closes, not the highs and the lows. The data we used is from Oanda, and in the original development, in the original video, I used data from January 2008 through to January 2019, and that's what we called the in-sample data. That's where we did the testing to see what the results were like, and that's where we chose things like our stop loss and our look-back period and our average true range volatility filter. Then in the original video we did some out-of-sample checking, so we had some out-of-sample data from January 2019 through to March 2021. And that was data we already had at the time of development, but we just hadn't included it in the optimizations, etc. Now, when we're making this video, it's March 2024, so we have data from 2021, or April 2021, through to March 2024. And that's true, unseen, out-of-sample data. So let's move over to multi-chart and see that up-to-date performance report. Here's the strategy on the chart in multi-charts. And first of all, I'm just going to do a quick development looking at that look-back length. I already said in the rules we're using the look-back of 14, but I just want to show you which ones work and which ones don't. So I'm going to do a quick optimization. I'll just show you what data I'm using first. At the moment I'm using the original in-sample data, so this optimization is going to mimic what I did in the original video. Got data from 2008 through to January 2019. If we run an optimization on the look-back length, and I'm going to go from a look-back of 2 through to 20 days in step 1. This shows us how each of the look-back lengths perform. Let's move over to the graph, and we can see that we're starting with a look-back length of 2, 3, 4, and then profit suddenly shoots up. We're looking at a look-back length versus net profit. So the one which made the highest net profit was a look-back length of 8, and then it gradually tailed off as we went to longer look-back lengths. Those of you who remember the original video realised that we weren't actually looking for the most net profit. What we were looking for was one of the highest win rates, and that's why we went and chose the look-back length of 14, which had a very high win rate of 88.92% in this case. So slightly less net profit, but a higher win rate. But I just want to show you using the look-back length of 8 to see what they look like. That's what the equity curve looks like using just that in-sample data. But I'm going to increase the data now to include data right up to date. I'm just going to change this to 1st of January 2025. We haven't got data up to that date, but it will soon show us where the data is loading up to. So we have data up to the 15th of March 2024. There's what the equity curve looks like. And if we look, we go back to about here, where the cursor is, that's in January 2019. So from then on was out of sample data. So that's looking pretty good, isn't it? Let's just adjust that data once more to true out of sample data. Remember, I created the strategy and I put the video out in April 2021. So if we take data from the 1st of April 2021 until now in March 2024, this is the real out of sample performance. And that's what the equity curve looks like. Making £14,400. This is trading just one full lot of Forex. Taken 117 trades, £123 of an average trade per trade. That's 12.3 pips. We haven't got any costs here, but by the time we've taken a few pips worth of costs, we're still going to have a large average trade. It's not going to affect our edge very much. Let's look at the annual period analysis, and we can see that the rest of 2021 was profitable. Then we had a good 2022, 2023, and then started off for the first quarter of 2024, we're in profit. So we can see that the results produced since I first developed the strategy have been pretty good. We did see a fairly large losing month back in September 2022, and we saw that on the equity curve. But at the end of each year, every year has been profitable. The next thing we're going to check is using the look back of 14, which I chose in the original video. And then I want to show you that slight minor modification, which is well worth using. By the way, when I made the original video and the original strategy, I actually created a PDF document which outlined all the rules and showed you how to trade it. I've made that PDF still available today, so if you want that, then find the link down in the description and you can download that immediately. If you'd like some more of my strategies, I've included 6 more pre-built strategies in my popular trading course. You can find out more about those strategies and more about how the course in general will benefit your trading. You can also find the link to that course in the description down below. Okay, let's go and have a look at the final up-to-date results for this strategy. Now let's change that look back length. We've seen the look back of 8, which produced the most net profit, but we want to use 14 because that's what we chose in the original video, which had the highest accuracy. We're looking at data, the complete data set now from January 2008 through to March 2024. That's the annual period analysis to show that over all those years we did have 2 losing years, but that one was a very small losing year. But overall, we're pretty consistent, making profits every year. That's what the equity curve looks like, a nice smooth equity curve. We've got an average trade of £102 per trade, win rate 87%. Let's just zoom in a little bit and adjust the data from April 2021 when I first released that strategy. And we can see 77 trades, average trade of 109, 85% accurate. And that's what the equity curve looks like. The last workspace I want to show you includes that modification I made to the strategy. You remember we were saying that when we actually got a signal, we would enter or exit the market at next open. The Forex market is pretty much open around 1700, 1705, depending on your broker, Eastern Standard Time. But the problem with entering the market at that time is we do see some wide spreads. So I always like to delay my entries or pull them back a bit. In this case, I've delayed them. I've actually delayed them 90 minutes. So if we saw the entry or the exit, rather than immediately executing that trade on the open of the bar, we're waiting 90 minutes until about 18:30. Not only are we going to see much smaller spreads, but the performance showed a slight increase as well. So this strategy uses the 18:30 or the slightly delayed entry and exit time. There's the equity curve, very similar to what we've just seen. And this is the data from April 2021 through to March 24. We've got a higher average trade now, £136 rather than 109, and a higher winning percentage. Minor improvements on the backtest report, but in real life, avoiding those large spreads are going to help tremendously. Net profit of £11,200. And the last thing I'm going to do, just going to add some trade costs. Same to the original video, £10 or 1 pip per trade, just to show you that once the costs are added, we see less net profit, obviously. Equity curve looks almost the same. Average trade value has dropped a little bit to £117, but there's still an edge there in this strategy, even once we are paying trading costs. We can see that for either of those look-back lengths and any look-back length in between 8 and 14, all were profitable for that 3 years after the initial strategy development. In fact, we saw that any length between 2 and 20 were all profitable, which is a good sign. So I'm pretty happy with this strategy. We can see that the edge is still there, and the edge is still as strong as it was when I first developed the strategy. So if you also like this strategy, feel free to steal it, and you can choose from any of those look-back lengths to suit how you want to trade. There's not too much more to say about this strategy, so that pretty much concludes this video. Thank you for staying till the end, and I hope you've learned something. If you have, then please give the video a thumbs up. I'm still reviewing a lot of my older strategies, especially the ones which I've put on YouTube, made videos about and made public. So expect more videos like this one to come. I hope to see you on the next video, but until then, this is Jared Goodwin, and thank you.